Hey everybody, I'm Zach.
And I'm Jesse, and you're watching Disruptive
Investing. News. We haven't gotten that down yet.
No.
We have to do a show for like 6 years before we totally get it done. Okay, so let's talk about Lucid Motors. They were one of the new breed of EV startups that I was really excited about when they launched. I mean, here was an EV-only auto company, kind of like copying Tesla's playbook, right?
I mean, they have an ex-Tesla employee CEO, Peter Rawlinson, who actually worked on the Tesla Model S, and they were starting with the high-end luxury EV, the Lucid Air, just like Tesla did with the original Roadster.
So you get people excited about your auto brand by making a really cool car. And by all accounts, when Lucid first announced the Lucid prototype back in 2016, it checked a lot of boxes. I mean, 500-mile range, it was going to be quick, it was going to be luxurious, it was going to be efficient.
But as Elon has said many times, it's one thing to make a cool prototype, it's entirely harder to mass produce it economically.
And so it was with Lucid, taking them until September of 2020 before they unveiled the production version. Lucid Motors went public in July of 2021 under a SPAC on NASDAQ. They raised $4.5 billion in capital to get their Arizona plant up and running.
So fast forward to Q4 2022, we just got the financial report and the full year 2022 report from Lucid. So how did they do?
Well, let's start with revenue. Lucid had $257.7 million in revenue in Q4. That's lower than what analysts had expected. They had annual revenue of $608.2 million, resulting in a net loss per share of 28 cents a share.
Okay, so not good.
Right. Lucid kept lowering their production guidance last year because it's hard to mass produce cars. CEO Peter Rawlinson said, last year was a challenging year for everyone, yet despite the extraordinary supply chain and logistic challenges, the team persevered with an unrelenting focus on delivering what we believe is the best luxury sedan on the market. Yada, yada, yada. Basically the same thing we've been hearing, right? Supply chain problems, logistics challenges. Look, I bought that argument right after COVID, lockdowns and all that stuff. But look, bottom line, Lucid only delivered 1,932 cars in Q4. And the number of reservations dropped by more than 4,000 to about 28,000 reservations.
So let's talk about going forward, and also how much cash does Lucid have on hand?
So going forward, Lucid is guiding for 10,000 to 14,000 cars delivered in 2023. That's not good, since at best, they will be able to about double what they built in 2022. And at the low end, if they do 10,000 cars, that's half of what they originally said they'd be able to make in 2022.
Last year.
Ouch.
So production is really their biggest problem right now.
Yeah, I'd say so. I mean, which is weird because Lucid also started offering $7,500 off the Lucid Air because they don't qualify for the U.S. tax incentive of $7,500. And I mean, why would Lucid do that unless demand was also soft?
I think I know why. Tesla Model S and Model X Plaid. Model S Plaid starts at $114,900. Lucid Air Pure, or the base model, starts at $87,400, but that's just a single motor rear wheel drive. The Touring and Grand Touring start at $107,400 and $138,000 respectively. So I think that while Lucid Air was super attractive back in 2016 and got lots of reservations, that was all before Tesla had released the Plaid version. And so now there's a lot more competition.
Yeah, and let's go to your question about cash on hand. They have $4.4 billion in the bank at year end. And that may sound like a lot, but they said that would be enough to keep them going through the first quarter of next year.
Wait, what? Wait, so that's only enough to keep the doors open for another 12 months?
Yes, and this is after the Saudi Arabia Public Investment Fund infused more funds. You remember last year, $1.5 billion was invested from them. So now the PIF owns 62% of the company.
Okay, so let me understand this. I can buy stock in Lucid Motors on NASDAQ, ticker symbol LCID, which I'm not going to do. I'm not going to buy that. But the Saudi Public Investment Fund, basically the royal family of Saudi Arabia, owns 62% of the company. So in effect, they own Lucid.
Yeah, it's a lot like buying stock in like Meta, where Zuckerberg owns 57% of the votes. He did this complicated thing with A and B class shares so that basically, even though he doesn't own most of the shares, he actually outvotes anyone. And the same thing will be true here. You can buy stock in Lucid, but your vote doesn't really matter because it's whatever the PIF wants to do with the company.
So if I don't agree with the Saudis...
Yeah, even if you got all your fellow shareholders together, you couldn't outvote their block.
Okay, so with only 12 months of runway, can Lucid get this plane off the ground?
I'm honestly skeptical. I mean, I think Lucid fumbled the ball a few too many times with production. And now instead of transitioning to new models to compete across more sectors of the market, they are still having to focus on just getting Lucid Airs made.
But what about Lucid Gravity, their next model, the SUV?
Yeah, what about it? I mean, 12 months is not a lot of time to get to cash positive. I really don't know if they'll get there unless either, number one, the Saudis are willing to plow more money in, which they probably are, or number two, Lucid can somehow pull off an astounding production year. All at a time when only selling a luxury car that competes head-to-head with Tesla is not the strongest business case, in my opinion.
But I mean, I've read some articles this week saying, be greedy when others are fearful.
Look, we're not financial advisors, Jesse and I. That's not what we do for a living. You should do your own research. So don't take this as stock advice. But generally, I do like to be greedy when others are fearful. But the underlying case for Lucid, in my opinion, is not that strong. But let us know what you think, and consider joining us on Patreon for our Now You Know Investor Club, where we dive into these topics all the time, and we have a Slack channel where we talk about this stuff all the time. And that's the thing. There's been a big push, you remember a couple of years ago, where everyone was like, EV stocks, anything I can get my hands on. And so a lot of people were very excited. You can see from the stock chart about this company because it just makes EVs, and the EVs look cool. But that's not the whole battle. You have to do everything right. You have to thread that needle. And the good news here for Lucid stockholders is that I don't think Saudi Arabia PIF fund is going to let this company just go that quickly. But on the other hand, you can't keep a company going forever if it's not going to finally start to make profit. And I just think it's going to take them, I don't know, at least 3 or 4 years to make profit. And that would be if a lot of things go their way. I just think that they put a lot of their eggs in the 500-mile basket, and I don't think a lot of people care.
It really is interesting because I think that the problem with EVs is that nobody understands them.
Right.
And so there are certain things that the average person, when they hear, they go, oh, okay.
Right.
And now I'm going to get into it. But I wasn't going to get into it at 250 miles.
Right.
That sounded too little to me because I don't understand how supercharging works. And I have a buddy who has a Bolt, and he has a 250-mile battery, but he can't go anywhere. And he was complaining to me the other week. And that's like the story. And for the majority of people who have never experienced an EV, that is the case. The other thing that I want to talk about here is different types of businesses. If you own a restaurant, it's a tough business. I'm not trying to knock it, but there is a pretty big margin of error when it comes to how you can run your business and keep it afloat. That's why there are so many restaurants, right? So there's just a lower bar to entry than, say, making a mass-produced vehicle company. However, when we talk about mass-producing vehicles, especially EVs, it's harder to do. You have to get everything right. Well, you can't mess up.
You brought up a really good point. If you run out of tomato sauce at your pizzeria, you can pivot a bit and make some other things to sell to your customers until you get that tomato sauce in. With an EV company, if you don't get the batteries, there's nothing going out the door.
Let's say that you do run out of tomato sauce. You can talk to your runner and say, go to the grocery store. Right. I know it's going to be more expensive, but we need the tomato sauce now.
Right.
If you run out of batteries, you can't go to a runner and say, hey, go get more batteries.
Right.
They're going to go, what? Where? You have to have suppliers. They have to be well set up. The suppliers have to be doing well.
Yeah.
All of this other stuff has to work. I'm, again, not trying to downplay restaurant owners, but we have a system in place where you can own a restaurant without having to, be a completely international corporation, which is just not the case with vehicles. And honestly, there's just not that big a room for error, as we've seen from the Bolt, as we've seen from all companies.
And a few years ago, Tesla was, on the verge of bankruptcy, and it might not be your competitor much longer, and all this kind of stuff. And you can almost flip the script and say, we're going to be a Tesla killer. Now, everyone knows that Tesla is your competitor. They're here to stay. And so it's a completely different paradigm. If you're going to compete, you have to think of how you're going to compete with the big boys. And I don't see how Lucid's going to do that. Their playbook started off fine, but your playbook has to be deep. And here, I just don't even think they're going to make it to the Gravity.
And I think that that's the really interesting thing. Tesla had this success story that you can't copy now. Right. Because Tesla at the time with the Roadster, there was nothing else on the market. Right. Nothing else on the market that competed with it.
Yeah.
Was an EV and had anywhere close to the range of the performance.
Yeah.
The Model S, the exact same story. At that price point, oh my gosh, it's only whatever it was, $95,000 for an EV that could work in my life. That worked.
Right.
Then the Model 3 came, and I'm sorry, Bolt owners, it just wasn't the same because of the supercharging. And it allowed people to actually make a real switch. And now if you come out with like, hey, we have this Roadster-like thing, people are like, yeah, I could buy a Model S.
Well, and the other thing is margins. You're stuck making luxury cars. That's why Rivian pivoted to not making their R2, which would have been a cheaper pickup truck. They've pivoted to making the R1X, which will be a more expensive SUV. Why? They need the margins to stay high. So instead of going to what you should do, which is a cheaper EV to get more market share, you can't because you're already losing money on your luxury vehicles.
Right. So they're taking the easy path, but the easy path doesn't lead to a bigger market.
No, again, not financial advisors, but I'm very bearish on Lucid's future.
Well, thank you so much for joining us on Disruptive Investing News. I really like doing this. I like reaching you guys. And, if you want to hear more stories every week about sort of more of the investor side of the clean, green, mean, sustainable revolution, you should definitely check out our Investor Club. That's where we have our Investor Club bonus stories, which we also record every week. We're about to record ours right now. So if you want to go check that out, you can head over to patreon.com/nowyouknow.
See you guys next week on Disruptive Investing.